If crypto were to disappear tomorrow, what aspects of it, the blockchain technology, would still remain in our traditional system?
Let's say crypto tokens disappeared completely, but the technology to have a decentralized operation still existed. I think that would still stay.
You have conversations with major TradFi players probably every day. What do you think some of the major TradFi players still inherently misunderstand about digital assets?
I think they probably don't have enough awareness or education around the practical benefits.
Like, what opportunity did you see early on that maybe other major players were not seeing at that time?
Perhaps there's a conflation between crypto tokens and the volatility of that sector versus the infrastructure and the advantages that blockchain itself brings.
Hi everyone, welcome to today's episode of Tech It or Leave It podcast. I am with Chetan Karkhanis, Franklin Templeton, Vice President of APAC. It's an absolute honor to have you on. Thank you for taking the time.
Thank you.
First question is that traditional asset managers has spent years watching crypto on the sideline so far. My question is, what made it inevitable for them to really get involved with digital assets?
That's a great question to start the topic. I think asset managers, whether it's asset managers, financial institutions, or anyone in general, it's been inevitable that the trend has been strong enough to support successful launches and to really support the adoption of more and more institutions coming in. And as larger institutions on Wall Street have announced plans and initiatives around blockchain and crypto, it's just been too big to ignore. So whether it's tokenized money market funds like the ones we've launched, or crypto ETFs, or other initiatives around liquidity, or tokenized gold for that matter, these are all kind of successful launches that have captured the interest of investors across the board, and I think we'll continue to do so.
Nice. Yeah. You have conversations with major TradFi players probably every day, right? And you're probably talking about digital assets as a topic. What do you think some of the major TradFi players still inherently misunderstand about digital assets today?
I think they probably don't have enough awareness or education around the practical benefits. And ultimately, there have been significant investments in past decades by institutions on systems that are catering to the regular needs of their client base. So stripping out those and installing new systems require costs. But the cost benefits for clients are there as well. And it's really about addressing what the investor of the future wants.
Sure.
So, perhaps rather than thinking of it as, is it really a cost benefit analysis? It's more than just that. It's an experiential benefit to end customers as well. I do think there's definitely a cost benefit. I mean, unless there were, and that depends on the chains and types of projects you're launching on the chains, of course. So I put a caveat on simply driving the cost benefit.
Of course.
But it comes down to, for example, if I can sell a product that is 5 to 10 or 15 basis points cheaper, and delivering that cost all the way back to the end customer, that's back in their pockets, and that should be something traditional institutions should really grasp and take advantage of.
Awesome.
And I just would add, I think the other, perhaps there's a conflation between crypto tokens and the volatility of that sector versus the infrastructure and the advantages that blockchain itself brings, right? So let's keep those two apart and analyze those separately when you're looking at service operations.
Amazing. Yes. Super fair point. On the first answer you gave me, you kind of mentioned that yes, TradFi has taken a long time to try to really get into digital assets in crypto. You mentioned that Franklin Templeton was one of the first movers. Mm-hmm. I'd love to understand why you think that was. What opportunity did you see early on that maybe other major players were not seeing at that time?
Yep. I think it has been largely, our CEO, Jenny Johnson, back in 2014 was, maybe even before that, was asking the question, what is Bitcoin? What is blockchain? Why does this all matter? She came from a tech and ops background. I think it's partly due to her, or strongly due to her leadership around, hey, we should look at this and we should evaluate why the technology matters on our operations and on our product creation. So when we launched our first tokenized money market fund back in 2019 and more, to a mobile app in 2021, we were one of the first ones to do so natively on chain, using the chain as a single source of truth, right? So I think we did it in a very clean and pure way. I think that just reflects on an understanding of spending years actually understanding how the technology works, how the different chains operate, and moving forward quickly enough. Now, we've also chosen to do it in-house because historically we used to have the transfer agent in-house. We only recently outsourced that over the last couple of years. But the digital transfer ledger, which we can do on-chain, represents another, it just reflects our understanding how investors are operating in this ecosystem and what we can build for them to enhance their experience with these new products. So it's kind of a historical legacy as well as a sort of a forward-thinking view that management's brought in, which I think, is kind of rare these days.
Yeah, awesome, amazing. So, just question off the top of my head. Obviously, adding digital assets in asset management as a whole kind of shifts. It's not necessarily the same target market, at least from the outside looking in. I'd be interested in understanding from your side, on the inside, have you seen a new inflow of new kind of target market from adding digital assets within the asset management world, or are you seeing that it's just being adopted by the people that historically have been with you guys?
It's that is the central question of the day, if not the year. Look, I think what we've seen is there's plenty of supply. There is a lot of tokenization capability. The demand is there, but it's largely coming from the Web3 natives.
Okay.
So I would rather see us talk a little bit outside the echo chamber and get the broader world involved. So I think there's two things that are going to happen. One is you're either going to see in the near term product come out that appeases the needs of what the Web3 natives want.
Sure.
And that'll bridge the gap between TradFi and DeFi, but it's more DeFi going into TradFi. What I want to see longer term, though, is TradFi embracing the DeFi experience and going on-chain. And I think there's certain sectors that are going to benefit, like collateral use case and collateral management, corporate treasury on the institutional side. The retail base could also benefit from that experiential factor as well as lower costs, potentially. But I think retail is going to take a little bit longer simply because you have many TradFi incumbents that are still evaluating and waiting to see how this plays out.
Sure. Last question for you.
Yep.
If crypto were to disappear tomorrow, what portion or what aspects of the technology behind crypto, the blockchain technology, would still remain in our traditional system, like financial systems today? Like what has been adopted and changed the way that traditional finance is done at the moment?
That's a very unique question because there's sort of the clarification of crypto were to disappear completely.
Yeah.
Let's say crypto tokens disappeared completely from the standpoint of price and discovery.
Exactly. Yeah.
But the technology to have it decentralized and have decentralized operations still existed.
Yeah.
But the economic model would change, right? So rather than gas fees and staking and validation economics, you're still looking at a decentralized system that can reduce cost. I think that would still stay because the central premise of this system is that the native protocols came first.
Yep.
The great native tokens rather came first. The governance and the structure of the protocols allowed that system to exist.
Yep.
But it is, again, the conflation between price and what relates to the tokens as opposed to the projects that can be built on the infrastructure. I think those projects would still remain.
They would still.
Yeah.
Okay.
So, and we're hoping that investors and participants in this ecosystem really focus on how they can build on the infrastructure rather than just being distracted by the price movements.
Amazing. Thank you for that answer.
My welcome.
My questions are done. Is there anything that we haven't touched on that you want to talk about? Anything at all that comes to mind?
It's been a long week, so I can't think of anything else. But
And you have another panel in like 10 minutes.
Exactly.
So you gotta get ready for that one.
So it's been a fun week and fun.
Well,
Thank you for the question.
Between a consensus panel in the morning and then post right after, I'm honored that you took the time to talk to me as well. So
My pleasure.
Thank you so much.
Thanks, Sebastian.
Thank you
All right.
so much.
Thank you.
Thank you.